The president not backing down from threats to impose additional tariffs on imports from China beginning as early as next year. And this time, Apple's iPhones may be in the crosshairs, too. Trade rhetoric from the White House sending shockwaves through the global supply chains as the holiday shopping season officially kicks off. So let's bring in Ryan Petersen, founder and CEO of shipping logistics company, a freight forwarder, Flexport. Ryan, thanks for joining us today.
My pleasure.
So let's start with the news of the day, which is really trade. We got this G20 meeting later this week. Now you have the possibility of more tariffs, higher tariffs on Chinese imports. What are you seeing currently in terms of freight flows through the Flexport network, and how do you expect that to change if this continues to escalate into 2019?
Well, yeah, right now we're seeing, of course, brands getting ready for peak Christmas season, and people are bringing goods in as fast as possible. I think that's business as usual. What's unusual right now is companies are really struggling and moving as fast as they can to bring products in early, ahead of the tariffs that'll kick in January 1st. So January 1st, the tariffs for many products will go up from 10% to 25%. So any brand that can, any company that can, is trying to get those goods in early to avoid that extra 15% duty.
So basically what we're seeing is a pull forward in terms of inventories, in terms of trade activity, and what's coming into the U.S. from China.
Yeah, and I think that's, of course, a real short-term solution. Once January 1st will be here before we know it. The other thing that's kind of going on in the background is brands and starting to move manufacturing, if they can, to Southeast Asia. We've seen a real surge out of Vietnam, Bangladesh, especially with fashion and some categories of consumer goods where it's, the manufacturing capabilities exist in Southeast Asia, in the Indian subcontinent. For things like consumer electronics, they really can't shift manufacturing very easily. Shenzhen and southern China are the go-to place for that ecosystem of supply chains.
What does that mean for Apple if we see tariffs on those products?
Well, it's not like they can make do manufacturing for the iPhone in other countries. It's going to be in China, as far as I can tell. So what that means is they're stuck with a hard choice. If indeed Trump, as he said yesterday, does go through with the higher tariffs that will hit the iPhone, it hasn't happened yet, but if that happens, they'll have to make the choice. Do they pass that through to consumers in terms of higher prices for your phone, or do they take a hit and make less profit? I mean, there's only really two choices for that if they can't move manufacturing, and we'll see what the decision is in the end.
Ryan, separating out, if it's at all possible, the demand that's being generated on a short-term basis to get ahead of tariffs, what are you seeing across your client base, just in terms of general flow of activity as a proxy for how the economy is? Are you seeing any deceleration in any areas?
Yeah, so, last year we saw China really led the market, especially on air freight, where Chinese air freight increased by 13% last year. It's now come to basically a complete stall for China in particular, which has led to basically global air freight volumes becoming flat. We saw in fact, for certain categories, a real decline out of China and Hong Kong, which most Hong Kong air freight is actually just trucked across the border and then flown out of the Hong Kong airport. So we are definitely seeing some hit on Chinese export volumes.
Hey, Ryan, we talked to DHL last week about crude coming down and whether or not these fuel surcharges could be eliminated or taken off. I mean, it's always stickier on the way down than it is on the way up, kind of like the prime rate.
It's very similar to the prime rate in freight. Whenever the prices go down, the freight forwarders like DHL and others have a tendency to keep some of that for themselves, and profit margins tend to go up when prices go down.
So their argument is, well, with the way our hedges are structured, we got to wait a couple months for it to happen. But would you expect some of those surcharges to come off and make life easier for people who do transport goods?
I guess you should see that if fuel prices stay low. It's the primary input in air and ocean freight is fuel prices, and so but it's funny because those fuel surcharges are quite sticky, and as you say, people they tend to keep it. They tend to not pass it through as quickly on the way down.
And Ryan, lastly, before we let you go here, what are you seeing in terms of peak season volume so far? I mean, we've got some of these early readings on Cyber Monday and Black Friday showing record numbers again. Is that what you're finding to be the case? How do you expect this to shape up?
Yes, we are definitely seeing record imports on both ocean and air freight. The volumes are strong. We see a weakness on the China side for air freight right now. But overall, it's really there, and the economy seems to be doing very well. And I think the moment comes in January 1st, because right now, we see a lot of people pulling volumes forward ahead of the January 1st tariff raises. We'll find out what happens after that. If the volumes continue, then we can all be pretty bullish. If it tails off sharply, then we'll know it was just a temporary surge.
Well, Ryan Petersen, thank you for joining us today, the CEO of Flexport.
My pleasure. Thank you all very much.